Right, listen up, you lot. Leverage trading. It's not about fixing your Land Rover with a rusty crowbar, although it can feel that chaotic if you don't know what you're doing. Leverage trading is a financial strategy that allows you to control a large position with a relatively small amount of capital. It's like having a superpower in the financial world, but with great power comes great responsibility. Essentially, it's like borrowing your mate's souped-up sports car to win a race. Imagine the thrill of driving a high-performance vehicle that you could never afford on your own. You put down a little bit of your own cash, your mate, the broker, lends you the rest, and you get to race a much faster machine. This means you can potentially make much larger profits than you would with just your own money. But here's the kicker: you get to keep the winnings minus what you owe your mate, obviously, even though you only put in a fraction of the cost. This can make leverage trading incredibly appealing to those looking to maximize their returns. Of course, if you wrap the car around a lamppost, you're in debt. The risks are just as amplified as the rewards, and a small mistake can lead to significant losses. That's leverage in a nutshell: amplified gains, amplified losses. It's a high-stakes game that requires careful consideration and a solid understanding of the risks involved. So, before you dive in, make sure you know what you're getting into. Let's say you've got £1,000 burning a hole in your pocket and you reckon Tesla stock is going to skyrocket. You've done your research, read the news, and you're convinced it's a sure bet. You could buy a couple of shares? A bit boring, isn't it? You might feel like you're just dipping your toes in the water. Now imagine a broker offers you 10-to-1 leverage. This means you can amplify your investment power significantly. That means for every pound you put in, they'll lend you 10. So your £1,000 suddenly becomes £10,000. Suddenly you're playing with £10,000. This allows you to buy 10 times the shares you could have otherwise. You buy 10 times the shares, the stock price climbs, and your profits multiply. But hold your horses, it's not all sunshine and rainbows. What goes up can come down faster than a greased ferret down a drain pipe. The stock market is unpredictable and can be very volatile. If Tesla shares take a nosedive, your losses are magnified too. Instead of losing a small amount, you could lose much more than your initial investment. That's why leverage is often called a double-edged sword. It cuts both ways. It can amplify your gains, but it can also amplify your losses. Right, so why would any sane person touch leverage trading? Well, picture this: you're at the dog track and you've got a fiver on a scrappy little mutt called Rocket. He's a long shot, but you've got a good feeling. Leverage is like putting a tenner on Rocket instead. If he wins, you're celebrating with champagne and caviar. If he loses, well, you were only down a tenner anyway. That's the beauty of leverage. It can turn small bets into big wins. It allows you to diversify your portfolio, dipping your toes into different markets without breaking the bank. And let's be honest, who doesn't love the idea of potentially turbocharging their profits? Section 4. Disadvantages. Don't crash your financial Fiesta. Now, before you rush off to remortgage your house and bet the farm, remember what we said about crash sports cars and amplified losses. It's crucial to understand that leverage can be a double-edged sword. While it can magnify your gains, it can also amplify your losses to catastrophic levels. Leverage can turn a minor miscalculation into a financial disaster quicker than you can say bankruptcy. Imagine waking up one day to find that a small error has snowballed into a mountain of debt. Remember, you're essentially taking on debt to trade, and this debt isn't just a number on a screen. It's real money that you owe, and it can have real consequences on your financial health. And debt always needs to be repaid. There's no escaping it. If you can't cover your losses, you could end up in a dire financial situation. If the market moves against you, that debt can spiral out of control, leading to a financial nightmare. The market is unpredictable, and even the best traders can find themselves on the wrong side of a trade, leaving you in a right pickle. The stress and anxiety of watching your investments plummet can be overwhelming. Plus, leverage trading requires nerves of steel. It's not just about making the right trades, it's about managing your emotions and staying calm under pressure. The constant ups and downs can turn your stomach faster than a roller coaster ride after a dodgy kebab. The volatility can be gut-wrenching, and not everyone is cut out for it. It's not for the faint of heart. If you're not prepared for the emotional and financial roller coaster, you might want to reconsider leverage trading. Section 5. Leverage a high-octane ride, but mind the brakes. So there you have it, leverage trading in all its glory, a bit like trying to tame a wild stallion. It can be exhilarating, potentially very profitable, but also risky. Remember, leverage is a tool, and like any tool, it needs to be used correctly. Don't be a muppet and dive in head first without understanding the risks. Do your research, start small, and never ever invest more than you can afford to lose. And if you're ever unsure, ask a financial advisor. They might not be as entertaining as me, but they'll hopefully stop you from blowing up your portfolio.